Welcome to our webinar. And what a challenging year this has been for business. If you'd have asked me this time last year whether I'd have expected to be working at home for the majority of 2020, so my answer certainly would not have been yes. And certainly looking forward for autumn and winter, it appears that the challenge for business remains. I'm Sandra Mundy, partner in James Cooper Creston that heads up the business recovery and insolvency team. I have with me today Jenny Cartwright, who is a our business development manager. She has a banking background, so a great deal of knowledge within the business sector. And I also have with me Lizzie, who is fielding our questions. You won't actually hear from Lizzie today, I don't expect, but if you have any questions through the seminar, if you post them, Jenny and I will endeavour to answer them at the end.
Thank you, Sandra. Good morning, everybody. I hope you can all understand my Yorkshire accent and you won't need an interpreter. Today, we've got a bit of a whistle-stop tour for you. We're going to try and quickly cover 10 topics. Obviously, lockdown 2 announced at the weekend. Quickly touch on some of the impacts from there. Social distancing, what might happen to people's spending habits. Obviously, the furlough scheme changed as well. Brexit's just around the corner. There's lots of logistical stuff with HMRC and VAT about to hit us as well in the new year. Obviously, a lot of businesses taken on some extra lending, so that's all mounting up in the background. Touch quickly on a bit of landlord and tenant issues, and then finally at the end wrap it all up around some of the personal risks that directors might well be facing at the moment. Without further ado, we've got a lot to get through. I'm going to go straight in with the C word, and that's Christmas. Sandra, can I ask you what you think the impact of the restrictions that were announced at the weekend might well have on trade, and in particular the seasonal business? There's a lot of firms would probably have been relying on it at this stage of the year.
Yeah, gosh, is it fast moving pace or what? I mean, when we sort of prepared for this webinar, it's certainly things have moved on since then. So we've had to adapt very quickly, as have very many businesses. Businesses have had to adapt to change in demand, and that's hit various sectors in different ways. So it's obvious that the travel sector, the retail sector, and the hospitality sector have had to deal with huge changes in demand, and that's been principally to their disadvantage. Whereas other businesses, so for example, delivery businesses, essential food suppliers, have also had to change their way of practice and actually ramp up very quickly. And that management of change during this very difficult time has been quite key for businesses to be profitable, or to at least even just survive in some instances. They've also had to deal with significant changes in supply, be that whether you can get some of the goods that you're looking for, or be it just capacity. So certainly hospitality and retail have had a lot to deal with in terms of social distancing. And then we've seen a massive shift in customer habits. I think Jenny's got some statistics for you in a minute about the changes from in shopping habits and move towards online. And for example, we've seen, I mean, I don't know about most people, but certainly the use for desire to buy new clothes for work has probably decreased. We've seen the failure of TM Lewin on the high street. Obviously, they're still doing an online presence, but the move away to shirts, to t-shirts, is something that businesses had to adapt to very quickly. I can't remember the last time I bought a pair of work shoes, for example. And then we've seen sort of short-term rapid change. For instance, our own business, James Cooper Creston, we went to working online overnight. Massive change, and not something we'd have ever considered in normal circumstances. And then I think there's the longer-term structural change. So retail, I don't think will look the same going forward. I mean, obviously we've got this now period of lockdown just prior to Christmas, which must be devastating for the retail industry, when a lot of their businesses and hospitality indeed will have made a good proportion of their profits during that run up to Christmas, and indeed Black Friday, I think it's called, is a big date in the calendar for retail, and that's going to be so different this year. I mean, if those businesses can adapt to that change, if they can go online, if they can do click and collect, that's going to help them. But again, I think it's something that is quite difficult to react to at the speed that we have to react at the moment, given the pace of change due to the virus. And then you look at other businesses such as gin suppliers moving over to hand sanitizer production. Very, very different changes that are going on within industry at the moment.
Absolutely. And you mentioned the statistics. I've obviously looked at the press over the weekend. I think the Post Office have announced two things. One, they need an extra 30,000 seasonal delivery drivers, because the move away from people having a big family Christmas is likely to mean that people are going to have their Christmas presents posted to them, but also the fact that people are sending each other gifts more often and utilising that service. And they've introduced the actually collecting parcels from your home rather than you having to get to the post office. I think they've realised they're missing a trick with the likes of DHL, who will collect your parcels from home and then deliver them to where they want. So the post office also jumping on that bandwagon. I think the supermarkets have said they had a 5-year programme to try and get people to switch to online shopping. And that was a 30% increase they were after over the 5 years. That happened in this last 6 months. So massive change for how people shop and what their habits are. And I don't know about everybody else, but it seems to be a lot easier to spend money online, and then things just turn up at your door. It's very simple to put those credit card details in the screen. So online shopping is at a massive level compared to where it was. How do you see people's discretionary spend changing over the next few months? While Sandra's talking, we've got a bit of a poll for you to answer, so see what you think as well, get a bit of feedback from you.
Okay, yes, discretionary spending. In terms of business, businesses may in the past have looked at some speculative projects, and I've seen a lot of those speculative projects go on hold. In other instances, though, I've seen new projects that businesses might never have thought of, which they've had to bring online very quickly to adapt to the fast changing pace of the world at the moment. Certainly seen a lot of businesses look at their overhead expenditure. In our own business, we've seen the cost of travel, for example, go down massively, as we're not able to travel between offices so freely, and visits to clients have been limited, although still happen. We've also seen businesses look at their staffing costs and their marketing budgets, for example. And longer term, I think we will see businesses look at their requirement for business premises space, especially if that's office based. And I suspect that there'll be a realignment of the size and the space that businesses take in the future. Lots of businesses will have taken advantage of the CBILS and bounce back loans. While some businesses have used that, there are a number of businesses that have taken those loans as maybe a bit of an insurance policy, and now deciding whether they do or don't need to use the funds. And even indeed, if there's something that they could use those funds for taking the business forward in a new direction that would be of advantage in this fast changing sort of new world that we're coming to grips with. And then for individuals, customer confidence, that's a big one in terms of what one might be looking at. Now, obviously, consumers didn't necessarily go away for holidays abroad this year, so there might be a little bit more spending money in the pot for Christmas, but there will be fears about unemployment going forward. The likes of Rishi Sunak, our Chancellor, has said that he can't save every job. So it's an interesting one. And then, of course, there's the changing habits. And as Jenny's already mentioned, that, you know, sort of it's quite easy to buy things online. You maybe don't necessarily keep such an idea of what you've spent on things. Jenny, I think you might have some answers to our poll.
Yes, it looks like it. So interestingly, from the audience we've got with us today, the majority is spending a similar amount to normal. So I think that's quite interesting that people are still feeling confident on wanting to spend. Let's hope there are enough turkeys to go around with all these smaller Christmas parties. I think that's one of the things.
Trees.
Yeah, Christmas trees, Christmas turkeys, where quite often a larger family unit might share those things. So a giant turkey might not be required if there's only going to be a small family unit together. So yeah, interesting that most people are feeling confident enough to have a good Christmas. I think we've covered everything on that slide, so we're going to change topic, as if the whole money thing is obviously very important to everybody. So we're going to go and move on to the F word, and that all changed quite dramatically on Saturday, and Sandra's done a grand job of trying to keep up to date with everything that changed sort of over the course of yesterday. How do you think the new announcements from Saturday are going to affect the scenarios now?
Yeah, as you rightly point out, Jenny, there's been a big change over the weekend, and I hope I get this right for people. So basically for November, December, we are back to where we were in August, which is that the furlough scheme will be back in place as it was in August, which means that employees get 80% of their wages up to a maximum of the 2.5, well, 2,500 a month. And the employer is required to make pension contributions and employers' national insurance contributions. So that, I'm sure, will be of great comfort to a number of businesses out there. Once the period of furlough ends, which presumably will be at the same time that the lockdown ends, which I mean, I'm obviously aware that a date has been given for review. I think the sort of mood music over the weekend was that that was a date for review rather than necessarily a date where the lockdown will end, but we'll just obviously have to wait and see what happens during the interim. But once that's ended, then it is expected that the job support scheme, which had been announced a little while ago, will then come into force. And it will be based on whether a business is operating within tier 1, tier 2 or tier 3. So for businesses operating within tiers 1 and 2, employees will be required to do in excess of 20% of their normal hours, for which the employer will pay their wages for that. The employer will also pay 5% for hours not worked, and that's capped at £125 per month. And then the government will top up by nearly 62%. So that should mean that employees receive around about 73% of their normal wage, up to a certain limit. And there's no prerequisite for having already claimed under the job coronavirus job retention scheme. In tier 3, it's a little more generous in that the government will fund 2/3 of the wages, capped at just over £2,000 a month, but the employer must pay the NIC and pension contributions. Just going back to the furlough that's going to be in place for November, December, I should have said that the eligibility criteria for that is that an employee must have been included on the RTI return, so the real-time reporting figures for October of this year. So it doesn't mean to say, so if you've taken on a new employee since the last lockdown, they would be eligible for this furlough provided that they were included on the October RTI return.
Okay, thank you. Gosh, quite a lot for people to take on, but certainly plenty of advice out there for people to look into. Going to change topic completely now. And we've done the C word and the F word. It would seem remiss of me not to do the B word.
You're going to get a reputation, Jenny. You really are.
I think Brexit is probably eternally grateful to COVID for coming along and taking away the spotlight from it. I can imagine that this year, if we hadn't had COVID, would have been an endless conversation around Brexit. Will it happen? Won't it happen? Will we get a deal? Won't we get a deal? If you could talk us through, Sandra, on your thoughts on this, and I think we've got another poll for you here to see what our audience are thinking as well.
Indeed. Okay. So yeah, in the words of Noel Edmonds, deal or no deal, it'll be interesting to see, and it wouldn't entirely surprise me, given the current climate in terms of the virus, etc., that the can doesn't get kicked down the road slightly from the end of the year, but we'll see. I know that negotiations are still ongoing at this stage, and obviously none of us are any the wiser about whether there's going to be a deal or a deal or a partial deal. But if there is a deal or a no deal or a limited deal, then the impacts for exporters and importers appear to be clear. There's going to be some impact for them. Certainly, it's likely that there will be tariffs imposed. And it's just the freedom of movement around Europe for business as well. I mean, that could be very impactful upon business. And we've also heard reports in the press, of course, lorry parks, etc., in Dover, where we're expecting delays. So I think the Brexit will be certainly disruptive to business. How disruptive it will be will depend on whether there's a deal, and if there is a deal, how close that deal is to the existing arrangements.
Yeah. I think there's a lot to think about around the whole Brexit scenario. Intra, the audience a little bit split today. I'm glad a few of you have completely lost interest. I have to admit, I put that one on there for me. It does seem to have gone on for an awful long time. But yeah, I think interesting that the no deal is second to a limited deal. So yeah, we watch this space with interest. I think I'll keep those numbers and see how that pans out come January. Certainly, I travel a lot in Europe for my hobby, and one of the things that I think people haven't really thought about is actually when you're traveling, if you're going to go through, say, France, Spain, Germany, if you're driving, you're going to need to have a driving permit for each of those countries. If you're taking your pet, you're going to need a passport for each of those countries. Your health insurance will need to be specifically relating to each of those. Your passport will have to have certain conditions for each country. And I think a lot of that sort of detail is a bit lost at the moment. And I think traveling Europe next year is going to be quite interesting. It'll be interesting to see if places like France and Germany make an example of people who turn up without the right documentation and send them away, or whether or not there's a bit of leniency there. So that will all play out next year, no doubt. While we're on the topic of government advice, as you'll see from the slide in front of you, HMRC have made a few changes. Do you want to talk us through those, Sandra?
Yeah, absolutely. This one's gone under the radar a little, I think, with everything else that's gone on. But from the 1st of December, HMRC will resume their preferential status as a creditor on an insolvency. And that obviously was done away with a number of years ago now. So they will become a preferential creditor for VAT, PAYE, employees' national insurance contribution, so something that was deducted from their pay packet, CIS deductions, and the student loan repayments, which again deducted from their payroll. The impact, I mean, people might think actually this is a really good thing at the moment, given that the Treasury is going to need, I think, every penny that it can get, given the level of support that it's put into the economy. But this was something that was in train well before the coronavirus hit. And the impact is likely to be on companies that borrow money to a large extent, because banks their security will be eroded by HMRC taking this preferential status. If you recall, when the preferential status was withdrawn quite a few years ago now, the prescribed part, which meant that some of the unsecured creditors received monies that the banks would otherwise have received, was introduced as a sort of a quid pro quo for HMRC no longer being a preferential creditor. That prescribed part remains in place, but HMRC retain or re-engage their preferential status. So it's actually quite hard on the banks. They're looking at whether to make a lend to a company. They're going to look and to see what the level of their security is and how that will be impacted by HMRC becoming a preferential creditor again. They're going to look for additional security. Now that might be, for example, asking directors for further personal guarantees. And it might increase the use of alternative finance, such as invoice discounting, where they just can't get comfortable with security. And this is going to be problematic, I think, because businesses probably need all the support that they can get in the current climate, and the impact of this preferential status for HMRC on the bank's ability or desire to lend, I think could be quite significant.
I mean, you mentioned it could be quite hard on the banks. I'm not expecting that we'll be getting much sympathy from that.
No, I think you're right.
Previous background. I know certainly before I left my previous employers, when you were putting a credit application together to lend money, one of the questions that had recently been introduced was, are your HMRC payments up to date, and have you got any time to pay arrangements in place? And that was a very specific question that had to be answered before you could move forward with the borrowing. So I guess as more people perhaps have to say, actually, I've got a time to pay agreement or whatever it is, that might well be something that is bearing on in people's mind. I mean, there is a lot going on. Come the new year, as well as Brexit and everything else we've got going, there's the deferred VAT to pay. People have got self-assessments to complete. Is there a bit of a perfect storm brewing here, Sandra?
Well, I think the government are doing what they can to help business at the moment. I actually do think that they, are genuinely trying to support business. When you look at the amount of money that they've pumped into the economy in terms of furlough and help for the self-employed, which again they're extending in this current lockdown period. But I do think that there are, businesses face huge challenges here. We're looking at the prolonged effect of COVID-19. I think if anyone thinks that that's going to be over shortly, I think they're sadly mistaken. I think we're in for a good few months more of this, if not looking at, sort of a year or more, unfortunately. Whilst the vaccine is looking promising at the current time from what we've heard, I don't think it's going to be widely available for some months yet. In terms of certain industries, we've talked about retail. There's some structural changes there. If you look at travel, that's just been hit hugely, and the ability of that industry to be able to bounce back quickly, I think it's going to be some time to come before that I think we're talking years before that comes back to anything like it previously was. There's been lots of businesses took advantage of the deferral of payments of VAT, and individuals took the deferral of self-assessment payments. The government have announced that there will be time to pay. Obviously, these amounts come due during January, but I think government will be sympathetic and they will allow businesses and individuals to spread that over a period of time. But obviously, you need to make that application. You will start to see the repayment of CBILS loans, bounce back loans and other loans during 2021. Businesses may still be thinking about redundancies. I don't think that's off the agenda at all yet. And there is a cost associated with that. I see a number of businesses every year saying, well, I'd like to be able to make redundancies here. We don't need these staff, but purely the cash flow implications of making those redundancies is huge. There are loans available for that from the government, but again, you're just adding to another sort of bank of payments that you've got to make. And then, of course, we've already spoken a little bit about Brexit and the tariffs there, which will probably increase the cost of trade for a lot of businesses. So whilst there have been some savings during COVID, so as I said, in my own business, the cost of travel has gone down massively. And most businesses aren't spending what they had spent previously on marketing because the opportunities just aren't there so much. There are some big squeezes onto cash flow coming up over the coming months, I suspect.
Yeah, absolutely. And some big changes to people's lives. I think the next point we're going to move on to is around the property market. And already hearing of firms being telling their staff that they'll be working at home till April 2021, never mind January. There's obviously a lot of issues in that market. We'll just touch on them briefly, and we've also got another poll for you to answer as well. Audience, please.
Yeah, my husband's actually been told he's not going back to the office until July next year, so that's well over a year working from home. Certainly office-related businesses rather than necessarily manufacturing businesses, etc., will be looking at what space they need, given that we've all adapted fairly readily to a new way of working, I would say. They're going to be, when lease renewals come up, they're going to be looking at, do I need this space and where do I need this space? And I think there will be a downward pressure on the rental market, certainly for office space within city centre. So I suspect commercial landlords are not going to enjoy the returns that they once did. I think there's likely to be an excess supply. Either that's because businesses have decided that they don't need as much space, or because sadly some businesses won't survive this. So landlords are going to have to be quite inventive about how that space is used going forward, maybe making smaller units out of one large unit because that's what businesses may want, or maybe even looking at conversion to residential. Lots of businesses and certainly individuals as well have been given rent holidays, and those will be sort of expiring at some point in the not too distant future. At the moment, landlords are not able to evict people, and they're also not able to present winding up petitions, but that will change. And I do feel that certainly for the smaller landlord, say for example somebody who's let out a small 2-bed house or something somewhere, they may well have borrowings on that property that they've got to service, and actually, it's quite hard on those landlords as well. They're not all big corporations with deep pockets that can afford to continue to weather the storm of non-receipt of rent. So it's a tough market for the property.
Oh gosh, that is interesting. It was quite curious. We did the polls and we were actually curious as to what the results were going to be. So for nearly 70% of people to be mainly working from home, that is massive. Yeah, that is that's more than I expected. I expected it to be a lot more evenly split between people who actually wanted to go to the office and would prefer to. So yeah, interesting times. So obviously,
certainly as a business, sorry Jenny, certainly as a business we've been looking at agile working policies, post-COVID, what people would like to do. And in our own business, having done that survey, most people going forward after the COVID crisis is over would like to do 2 to 3 days a week in the office and a choice on the remainder of the day. So, and that's something that we will be implementing, and I don't think we'll be alone in that, but it's interesting that so many people think they'll be mainly working from home.
Yeah, well, rather than a mixture. Yeah, so some big decisions then to be made by our business owners over the next few months. I think you did a webinar, a bit more detail on directors' responsibility back in 2019 when it was acceptable to blow your birthday candles out on a cake and then hand it round for people to eat. It seems like a long time ago now. We'll circulate a link to that to webinar in due course, but is there any more bits and pieces you want to just cover off quickly here, Sandra, around the directors' responsibilities here?
Yeah, absolutely. I mean, people will have heard me say this before, that taking advice early is probably key to to understanding what directors' responsibilities are, and I think that's never more so the case than it is now. At least in this fast-paced sort of changing world, you will at least know the risks that you are facing rather than blindly going on. So I think that advice, that early advice bit, is really very key. And of course, that doesn't mean that a business, just because you come and talk to the likes of me, doesn't mean to say that business is going to end up in an insolvency procedure. Indeed, most of the businesses that I speak to, just for advice, they never end up in an insolvency procedure, but at least the directors do know what risks they are potentially running by continuing on as they are, and maybe gives them the opportunity to adapt slightly to something such that they don't cause themselves a problem going forward. In the sad event of a company going into liquidation or administration, then the liquidator and or the administrator have a duty to investigate the conduct of the directors that held office in the 3 years prior to the date of the failure. Two purposes for that. Firstly, it's to make a report to the Insolvency Service for them to use in their consideration as to whether it's appropriate to disqualify a director or not. And just for people's information, there are about 1,000 to 1,500 disqualifications each year. And I think that there's probably something around about 40 to 50,000 directors in any 1 year that go through an insolvency process. So it's not huge numbers that get disqualified, but it's definitely worth noting that there is that requirement and there is the possibility of disqualification. The other reason is to see whether we can recover any monies for the benefit of creditors. So has the director's conduct fallen short of what might be reasonably expected? We look at whether there's been any preferences, whether there's been any transactions at an undervalue, whether there's been any fraudulent trading, whether there's been misfeasance. Used to spend, we still do spend some time looking at wrongful trading, but at the moment the provisions of wrongful trading are suspended, and that is where a director knew or ought to have known that there was no prospect of avoiding an insolvent liquidation, but carried on trading, and as a result the position got considerably worse for the creditors. All of those situations potentially give rise to a claim. And then also directors in the current climate need to be a little bit concerned about giving personal guarantees. We are all sort of look at the future at the moment, and really none of us know what the future might hold, and therefore giving a personal guarantee would, that may well come back to bite you at a future date. It is something that you need to give really serious consideration to. I suspect that suppliers will ask for them more and more, and certainly the likes of banks will ask for them more and more going forward as the uncertainty increases. And also, if you are somebody who is asking for one of those personal guarantees, I'd certainly be wary of the director that gave one quite easily. And the reason for that being may well be that they've given so many personal guarantees already that giving one more doesn't really make any difference, because all their personal assets have been exhausted at that stage. So yeah, that's just a really quick canter through. But as you said, Jenny, I've given a presentation on this in the past, and it might be worth a look.
Yeah, we'll circulate that to everyone at the end. Excellent. Well, I think we've just about managed that within our time scale. Lizzie, can I ask you if there's any questions in there for Sandra to answer?
Thanks, Jenny. Yes, we've just got one question today. So Sandra, the question is, have you noticed an increase in businesses requiring your help and support over this last period?
Yeah, thank you, Lizzie. We certainly have. There's certainly, I'm talking to a lot of businesses that are looking for some advice. Businesses that I might not necessarily have thought would have been hugely impacted by the current situation. So, for example, a few months ago, I was talking to a business in the printing industry, and their principal clients were people that were organising festivals, so they'd print the flyers, etc., for those. And of course, none of those festivals just didn't happen this year, and therefore they had taken quite a hit in relation to that. We've also spoken to a number of businesses in the travel sector, which again, not unsurprisingly, and that's led to some formal appointments. We've also dealt with some a large retail client, and you know, I think there were also a number of businesses that we were talking to that had been struggling previously, and unfortunately COVID has just been the last straw for them. And we've certainly been talking to directors and doing quite a lot of solvent liquidation work where those directors have just decided, shareholders have decided it's time to exit. You know, they don't want to face what's coming up in the coming months, and it's time to crystallise their position and look, you know, sort of look forward to enjoying the fruits of their labour going forward. So yes, work has increased significantly.
Oh, okay. Any more, Lizzie?
No, I think that's it for today, Jenny.
Okay, right. Well, I'm conscious everyone's probably got their lunch. You probably get lunch these days, and if you're working at home, that's probably a lot easier to take. All that really remains for me to say is thank you everyone for attending. Thank you, Sandra. We prepared for this last week, so we prepared for it again yesterday rather. So thank you, Sandra, for sharing your insights and your knowledge and experience in this area. Hopefully everyone has found it useful. Thank you for attending, and hopefully we'll see you all again soon, face to face.
We look forward to speaking to you over the coming months. Take care. Stay safe, everyone. Bye-bye.